following is a presentation of TFNN. The Tom O'Brien Show is produced every business day. Tom takes your phone calls toll free at 1-877-927-6648. Internationally at 727-445-1044.
Let's go to our man Jim in Palm Harbor. Hey, what's going on, brother?
Hey, how you guys doing today?
Doing great, man. How you been?
Oh, great. I really appreciate you and Tommy. You do a great job, great work, and I really appreciate it. I watch you every day.
Well, thank you so much. We appreciate you growling and prowling with us out here, man. Let's go to Sylvia in Tampa. Hey, Sylvia, how you doing?
Hey, Tom. Good morning. Thank you so much for taking my call. I want to tell you thank you so much for the advice you gave me on dust yesterday. I exited when you told me, and I made a healthy profit for a very short period. So thank you.
Now, Tom O'Brien.
Welcome, folks. This is Tom O'Brien of TFNN. We go 5 days a week. We go 10 hours a day. We go 24 hours a day on the internet at TFNN.com. Always remember, folks, whatever you think about, you bring about. Whatever you focus on grows. Hope everyone's having a great day, safe day. Let's make it a great night, folks. Be impeccable with your word. Manifest your true intentions. Regardless of what language you speak, your intent will manifest through the word. What you dream, what you feel, and what you really are will be manifested through what you say each and every day. Market-wise, let's take a look at it out here. We have the Dow Industrials up 151. You get the Nasdaq up 65. S&P's up 16. Gold contract down $7.90, trading at $12.48 an ounce. Silver down 22 cents, $15.93 an ounce. Light sweet crude. Pretty amazing. $73.25 a barrel. It won't budge. It wants higher price. Pretty amazing. Got over the highs that were generated out here last week. Notes and bonds, 10-year note down 6 ticks, 120.07. 30-year bond down 8, 145.01. They went higher yesterday, pulling back with light volume. They continue to want higher price, lower yield. King dollar. King dollar up 111 ticks, trading at 95.085. The euro is trading 115.57 to 1 U.S. dollar. The yen is trading at 110.63 to 1 U.S. dollar. Our phone number is 877-927-6648. Give us a call, folks. Want to know what's going on in your world. In the world of the S&Ps, let's take a look at them. This is going to be an important hour coming into the close. Why? Because what we did have out here, folks, is that you had the S&Ps get under the low of Monday. Bottom line, they rejected it, and we're going to have lighter volume. So we'll see what type of bounce we're going to get going here. You know, the E-minis got down to 26.93. The low of a potential ABC down was 2,700. And we'll see if, in fact, this can hang coming into the close. Thus far, what you have, we are right into the downdraft at approximately 1 o'clock yesterday afternoon. So what I do expect you're going to see is you're going to see some high volatility coming into this close as the bulls and the bears fight it out. And this is actually where we are in the SPY right now as a classic, meaning it's a Wyckoff ice moment. And that ice moment is set up right where we are. The ice moment is actually set up at 271.38. And we're 271.41. Gold contract, my God. Gold, folks, bottom line, no bid. Gold is at 1248.20. It got to 1247. Bottom line, yeah, you get volume contracting, but guess what? Bottom line is that there's no buyers in the gold market. If we go to take a look at this and we put this on a continuous contract, what you're going to see out here, bring this back a few years, you have the swing point out here. I think it's 1634. Yeah, 1636. Bottom line, coming into a Friday, it's a little problem child. That's what it looks like, because what you do have, Friday's a tough inside the gold market, inside the metals market in general, particularly if you've been going down. And we've been going down in that gold market since April, the week of April 11th. King dollar. What do we have with King dollar? King dollar is just the opposite, of course. That's the direct correlation. King dollar up here is holding the 95.10 level. The last high was 95.220. We got to 95.225. Bottom line, what King dollar is doing is challenging the highs of October of 2017. That swing point there is 95.070 on the continuous contract. We're basically over it right now. And this is going to be a big number, folks, because if, in fact, we do break topside here, there's not much stopping a good old king dollar to get up to that 97. Really, you can make the case you can go to 99. And that would be problematic in a big way inside the metals market. Some of the high-volume stocks out here. Today, you have Bank of America up 54 cents. Walgreens is getting smoked. There's the pharmaceuticals, well, the drug companies are getting smoked, folks. That's all about Amazon buying PillPack. This is a monster ABC down. It's like you're at 60 bucks right now. You're breaking low. You have 33 million shares versus the 5.5 million. You're talking about a $50 price tag on Walgreens. That'll be the price projection of the ABC structure on the way down. That being said, you know, we'll see whether they get any support at the $50 level. But bottom line, big number, huge number. Some of the other higher volume, well, actually, let's go to CVS. CVS is getting smoked, too. There's about 5 of them that are getting smoked. CVS is down $4.33. Well, that's not an ABC down, but let's put this back on a weekly. Phew. Wow. Oh, yeah, this is a problem child, too. This is off the highs of 113. It's already got cut in half. Oh, yeah, these drug companies, folks, this is a whole different dynamic. CVS looks like let's see. We don't have an ABC down, but I can tell you that there's not much support on CVS to $44, and right now you're at 65. So you're talking about one monster number out there. Notes and bonds. Let's go take a look at the note and bond market out here. So note, 10-year note first. 10-year note right now, down 5 ticks. You did 1.2 million contracts. Bottom line, notes and bonds still want to go after these high-volume swing point from the 30th of May. The high-volume swing point, 30th of May, is 121.03 in the 10-year. If we go take a look at the 30-year, what we have with the 30-year right now is that the 30-year is at 145.01. That high-volume high is 145.28. Some of the other commodities out here, this is what you have happening. You have corn is down 2%. You got copper is down 1.3. Silver is down 1.3. You get natural gas. We came out with natural gas numbers today. That's down 1.4. Let's go look at so natural gas had some movement out here today. Yeah, big movement. We went from 301 to 293. That is one monster move, folks, in the natural gas market. You have gold down 0.6%. Wheat is down 1%. Gasoline, now that's down 0.3%, even with oil up 0.6%. Oil got into $74 today. The last high that was out here that it challenged yesterday was 72.70. Right now you're at 73.25. And this is what is the wild thing about oil. If we take oil, we put that back on a continuous contract, what you're going to see here is that this little baby doesn't have much. Well, it has flack at 75. $75 to 77 should give it some flack. Stay right there, folks. We got our man Jason Path coming back from the Dutch book. Coming right back. Hi folks, Tom O'Brien here. If you'd like to get my daily newsletter, Market Insights, then now is a great time to sign up for a 30-day free trial. Every morning by 9:30, I send out my morning letter to subscribers with market commentary on a variety of markets, currencies, and commodities to keep investors up to date on the day's trading action. Included in Market Insights are specific buy and sell recommendations for stocks, ETFs, and even options, with stops and price targets included for every trade in my newsletter. If you'd like to try my newsletter risk-free for 30 days, then head over to the front page of TFNN and you'll find Market Insights under Trading Newsletters. I use my years of trading experience to bisect and dissect the market every morning and give my subscribers the most important information they need to know for the day ahead. I even issue afternoon updates for my subscribers whenever warranted with important market action. I'm always scouring the market for the next great trading opportunity. Sign up for your 30-day free trial to my daily newsletter, Market Insights, today by visiting the front page of TFNN.com. Wow! Go get 'em, folks.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. Until recently, it was almost impossible for the average investor to hedge against currency risk in Europe or Japan. For a bold trade on Europe or Japan that protects against moves in currency, trade HEGE or HEGJ, 2 times currency hedged leveraged ETFs from Direction Investments. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Tom takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. We have the Dow Industrials right now up 178. You got the Nasdaq up 76. S&Ps are up 19.5. Let's go over to our man, Mr. Jason Paff from the Dutch book. And folks, if you haven't seen or heard Jason yet, awesome analysis. You can check out thedutchbook.com. Jason has a free newsletter they'd be happy to send over. Jason, welcome back to TFNN.
Tom, thanks, man. Appreciate it. Looking forward to it.
We got lots of action out here, man. Holy
crazy,
cow.
Man. Man, market's up 178 on a day we revised GDP down 2 points.
Yes. Go figure. No, there's no doubt. Amazing. So let's, we were just talking about your newsletter, and the headlines out here today, and this is today's, folks, is the glass half full or half empty. And what I'd like to do is that, can we go through these charts? Because the currencies might, starting off with a currency is a good deal. I mean, this dollar is killing my gold trade.
Yeah, the dollar's up. We like the 95 handle now as a level of support. I know we've bounced a little bit above and below that lately, but our macro narrative is a stronger dollar for some time now. And
so I'm looking. What I have, I just put up your first chart here, Jason, which is the U.S. dollar, Japanese yen. So talk to me about that.
Yeah, so we certainly like the dollar versus the yen right now. We just crossed, and I'm bringing it up here on my side. Okay. Just crossed the 200-day moving average. We've got the level around 111 there. Formerly was support. Lately, there in mid-May was a level of resistance. We think with some momentum behind the dollar, certainly an improving picture in the United States. Japan just released some very disappointing retail numbers last night, 0.6%. Growth. It was 1.5% on a previously revised down number. A lot of momentum behind the dollar right now. Japan's treading water, trading sideways, at least in terms of their data. Starting to get a little more disappointing. Now that we've crossed over the 200-day, we think we test 111 early next week. We think we break through that and reform that as a level of support, and we'll be up into the low teens through the balance of the late summer.
Yeah, and the correlation is so intense, folks, between the yen and what the Nikkei does. And, last night the Nikkei rejected lower price, man. I mean, it was closed flat, but that's so intriguing. You know what's wild about Japan, Jason, is that it's hard to comprehend. They've been at negative rates for so long, but yet their economy seems to do well. It's just that their debt's so big. Is that the number here? Or?
Yeah, and it just, it hasn't changed, right? Like,
yeah.
That's the interesting part. They're just treading water, and you could say that this week, and you could say that for the last several years.
I know.
Who knows what the end game is? Certainly we don't, but now that the rest of the, certainly the United States is starting to perform better, and the domestic numbers are getting better, and the rates are going up, we're going to start to see that some of that old school divergence where folks are just, looking at the rate gap, the improving data, and I don't know how Japan gets out of this, right? I think they've done a lot of work just to stay where they are. Maybe if they hadn't done this work, it would have been a much more of a decline, but at some point, something's got to give.
It seems it. I felt like I'm talking about the same thing for the last 20 years.
We said that 2 years ago, right?
I know, man. I know. Unreal.
I know this week it's weaker against the dollar, and we're going to trade it and for the best there.
Awesome. So the next one, and we got. In fact, I hope our man Paul from Nevada is listening out here, because I was talking about you yesterday on the air. Bitcoin. So let's talk to me about Bitcoin. Bitcoin 15-day forecast. I get up with a chart here.
Yeah, so we modeled Bitcoin multiple times a day, and we had a price forecast. We run two types of models, Tom. We run a simulation model where we'll take all of the market inputs and simulate the Bitcoin market thousands and thousands and thousands of times. Yeah. And that's where you'll see where we'll produce a range, right? And we'll look, this week our range was from about 6,000 to 6,700. Okay. Clearly we'll break it down to the lower side of that. Yes. But then we'll also produce a regression model where we'll take all of the historical data and really try and produce a point forecast of where that market's going to land. Last night's models lowered from about 6,500 over the next 14 days to an apex of 6,300. Okay. And if you can zoom in, you can see there in the little the green box here. Yes. It's an arcing pattern where we really see, the next few days, right where we are, just continuing to bounce around 6,000. We might push up to 6,250, 6,300, and then it's going to fall off again down to the 6,000 level. That's what the model's telling us. A lot of that's informed, and I've got a chart there too on the volatility. Yeah. Bitcoin historically has needed volatility. A lot of equities and a lot of other, tradable instruments, volatility can be a negative correlation, right? And yes. With Bitcoin, it's exactly the opposite. Higher volatility means more momentum, more folks are piling into the market. I see. And that price, it'll move up and down, but historically when it's moved down with that momentum, it's moved right back up. And we just haven't seen that momentum with Bitcoin. As the model sees less and less momentum on a rolling 30, it just gets lower highs, deeper lows, and so we're still constructive long term on Bitcoin. This is still a very resilient level around 6,000. Yes. But the upside just appearing over the next 2 to 3 weeks.
Yeah, I had the volatility chart up here too. That's pretty cool. What are the two little eggs of those swing points? What are those eggs? You're just showing that there are the swing highs there at like the 9,300.
Yeah. Yeah.
Oh, okay. Cool. Yeah, right.
Yeah. Absolutely.
So, I see. The 30-day estimate volatility, 3.58. The 60-day, okay, cool, man. I got that.
Yeah. So we saw a week ago, we saw a little bit of a bounce in volatility. Clearly, that was off of some negative news. So we were thinking maybe we had another swing low coming in on the volatility as well, and it has not materialized. A couple of months ago, we were looking at on a 30-day, an 8%. Potentially threshold on a rolling 30-day volatility, and right now we're less than half of that. It's just evaporated.
Yeah. Oh well. It's going to be interesting is that of course we're coming into the 4th of July, and so we're going to be closed a couple of days, but yet we know Bitcoin trades 24 hours a day, right?
I know, man. It gets thin, and I mean, yeah. On those off periods, if you're trading Bitcoin, you got to be more vigilant and trade more than ever, because that's when over the weekends we see some of the sharpest moves we've ever seen in Bitcoin, right? I know. When the U.S. is on the weekend, it gets thin. People unload large positions either way, and the market can really move.
So natural gas, we got the natural gas numbers today. Talk to me about natural gas.
Yeah, so we hit the number last week, 91 BCF on the build. This week, we overshot that a little bit. It was lower than consensus. Natural gas, we continue to see upside over the long term, but kind of like I was saying with Bitcoin, it's just really limited in the near term. I think it's taken us 3 months to move 30 cents. Yes. Again, we're just not seeing the volatility. We're seeing an incremental. The market's trying to work higher, but it's just taken a really long time. So again, we're still constructive long term on natural gas. We're going to make the seasonal turn from injection season potentially below 3,500 BCF, which historically, Tom, is a really low level.
Is it? Okay.
That's been tracking our model very consistently. So, supplies are tight. We just are not seeing the kind of bounce. The weather certainly has been hot in some places. It's been hot where I am. I know it's been hot where you've been.
Yes.
But we've seen out west it's been cooler seasonally. So, we need one really good heat wave and for supplies to continue to tighten, and maybe we'll get a bounce. But right now, all of our models are showing a continued grind, a little bit of upside, but it's taken a long time. I mean, 30 cents in 3 months is...
Seriously.
It takes a lot of patience, man. More than I've got.
Well, listen, man, we appreciate the update.
Yeah, man.
Folks, Jason is going to be with Tommy and myself Monday morning. Check it out between 10 and 11. Listen, you have a great one, a safe one. We appreciate the education.
All right, Tom. Appreciate it, man.
Thank you.
Be safe. Good luck.
Stay right there, folks. Come right back.
No matter what kind of trader you are, 2018 is a great time to try out a subscription to Tom O'Brien's Gold Report. Whether you just plan on diversifying your portfolio with some exposure to gold and gold mining equities, or you're a gold bull that sees 2018 as the year of commodities, now is a great time to sign up for the Gold Report. Tom O'Brien publishes his Gold Report every Monday morning before the market opens and covers a variety of topics including gold, silver, platinum, copper, the XAU and HUI, the dollar, bonds, South African rand, as well as more than 20 of the most actively traded mining equities. Start your 2018 off with a bang and sign up for the Gold Report today. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. For all the details and to start your subscription right now, visit the front page of TFNN.com and you'll find the Gold Report under Investment Newsletters.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you, like it does me, call 1-855-750-4051 to find out what they can do for you. That's 1-855-750-4051. Call them today. Everbank is a member FDIC and equal housing lender.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. Dow right now is up 148. Nasdaq's up 70. S&Ps are up 16.5. Tesla. Let's go over to Tesla and take a look at Tesla. So Tesla out here today had caught a bid all the way up to 357. That was up over $10.50, and now it's up 569. And what you have here with Tesla, this is going to get intriguing because good old Elon Musk. You know, if you read the journal yesterday, he's been sleeping there for 3 days. You know. Great PR, no doubt. Bottom line is that what Tesla did do today is that they invited all Model 3 reservation holders in the United States and Canada to confirm their orders. Now, what happens is this, folks. So the folks that had done a reservation, That reservation was placed with a $1,000 deposit that was totally refundable. And this was a long time ago, folks. This was the spring of 2016. So what you have now is this. Now the folks are going to have to make a choice. Do I take the $1,000 back? Or, in fact, bottom line, I'm confirming the order. So if, in fact, they confirm the order, they have to send in another $2,500. And the bottom line is that that can turn into a lot of money, which Tesla does need. You know, just to give you an idea, of 100,000 people, that's 250 million. So bottom line, we'll see where this shakes out. What Tesla is trying to do right now, and this is where it's going to get really dicey too, because Tesla has promised to do 5,000 Model 3s per week. And with just a few days left in the second quarter, they're going to have to be coming out with an announcement next week. So the bottom line is the company just erected a massive tent in order to house another assembly line for the Model 3 this month. And bottom line, it's going to be next week, folks, that Tesla will come out and make the announcements of exactly how many Model 3s they are pumping out of that assembly line. So the bulls and the bears, yeah, they are going to be fighting like crazy out here on Tesla. And if we take a look at Tesla, let's see what we have. Tesla still has, oh, it's come down a little. It was a 32 or 33% short position. Right now, Tesla's at a 29% short position, so it's still almost 1 out of the 3 shares that have to be bought. And what is sticking out like a sore thumb is that Tesla has a high volume spike, and it hasn't been tested. That's nasty. It's nasty. It's $100 lighter, $244. So bottom line, my take is that that's where it wants to go. I wouldn't short Tesla just because of that short position is pretty incredible. But bottom line is that we're going to know next week, unless he pulls something else out of his sleeve, which he very well could, by the way. Amazon, let's go take a look at Amazon. So Amazon, this is going to change, I suspect, the drug business in a big way. Amazon's PillPack acquisition is a big number. The thing that's going to get intriguing is that when we take a look at Amazon, Amazon's trading 1701. You know, bottom line is that Trump, the Washington Post, Bezos, they all have a thing going for each other. But what you'll see probably happen out here, which is going to be pretty wild, is that Amazon is going to bring down drug pricing. And that's why you see CVS, Walgreens getting smoked out here today. So, you know, in the context of how a business gets done, Amazon just might be what the good old government actually needed to get in between here. Because what I can't see is this. So picture this. Yeah, MCK, that's McKesson also. That is also smoked. McKesson's down 860. That's a low for the year, 136. These are mail order companies that distribute drugs, folks, and they're all in. Well, they're not all on an ABC down. McKesson is. It's a big one too. Let me pull this back in a weekly. Ooh, oh my God! Look at this. This is, you know, I'm almost. The amount of high volume lows out here, pretty amazing. And as one of our tigers telling me, Duffy out here, is that this is the largest, biggest drug distributor. And guess what is laying out here, folks? From October of 2016, you got a high volume low of 114. Bottom line, you're at 135. There's a lot more damage that's going to be done out here. Look at these things, man. It's pretty amazing. But bottom line is that drug prices, I expect you're going to see them going down. There's, you know, the way Amazon does business, they'll come into an industry and this. Actually, let's do this. I want to see how big this. I know the industry's got to be big, but I would. Oh my God! Look at this. This is heavy. So thanks, Duffy, man. I appreciate it. This is insane. So McKesson, folks. Okay. This is amazing. They do $208 billion. They're doing $51 billion a quarter. That is a monster. They did, in 2014, they did 137. This year, 208 billion. Now, you know what's going to be intriguing here, folks, is to watch the aspect of how these numbers are going to have to change for the next year. I don't know if they'll change these things very quickly, but you're going to see some filings that they will put in place. Yeah, this is a big business. CVS does $188 billion. Walgreens, oh my God, no wonder why they want to get in this business. I knew it was big, but I really didn't. Whoa. Okay, Walgreens. $131 billion. Wow, you're talking about, what is that? That's 131 to 5. You're talking almost $500 billion, just those three companies alone. That is one monster number, man. And if we go over, just let's watch this for a second. I got to see. And Amazon is doing, so Amazon is doing as much as McKinsey right now. They do 51 billion a quarter. That's going to be in the last quarter of this year. So you check out how this works. The last quarter of this year, they expect to do 74 billion. Big number. And now the real question is going to be, you know, you get into that drug delivery business, it's going to be a whole different ball game whatsoever. Let's go into the XAU, the HUI. So gold continues to get smoked. XAU today, you know, we went to a price point of 79.31. You're at 80.01. Not doing much. We take a look at this volume. Yeah, you know, you've been contracting with volume, but it hasn't been able to hold price. The danger here is going to be coming into tomorrow and the aspect of not only a long weekend, but a long week because of the 4th of July. That's where this is shaking out. The Gold Bugs Index, that is hidden, that rejected now the lows where we had strength on March 21st. That's 170.65. We'll see that if in fact we can get anything going off of that low. The TLT, the bond market, TLT, you know, is hanging tough up here. The wild card still out here are notes and bonds. That's, you know, the note and bond market continues to want higher price, and it's like, why? Well, because people are buying it. That's what it comes down to, right? The 10-year note right now is 2.8%. It's Tom O'Brien. This is TFNN. You stay right there, folks. We come right back. We have the Dow Industrials right now up 127. You have the NASDAQ up 64. S&Ps are up 15. We'll come right back.
Many of our new listeners have heard about The Tiger's Den. The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of the TFNN shows, plus see all of the charts as they happen live and have access to archives of all of those charts. You can test drive The Tiger's Den absolutely free for 30 days and greatly enrich your knowledge of these markets and how to make your money work for you. Details on The Tiger's Den are on the front page of TFNN.com. Tiger TV is an exciting way to experience TFNN programming. See high-definition video, giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com.
I'm certain you are or strive to be one of the best at everything you do in life. It's the most common trait that we tigers and tigresses share. If you're looking to become the best of the best when it comes to managing your money, let me teach you to do what most wealth managers tell you can't be done, which is how to time the markets. I'm Steve Rhodes, author of Mastering Probability, and for the last 12 months, Timer Digest has been tracking my newsletter signals, which have earned me the ranking as their #1 market timer in the nation for the S&P 500 for the last 12, 6, and 3 months. Timer Digest also ranks me as the #1 market timer for gold as well. The fact is, markets can be timed, and I'll teach you the exact set of tools that I use that has transformed me into one of the best at what I do. Sign up for Mastering Probability today by clicking on the newsletter tab on the homepage of TFNN.com and get immediate access to workshops where I take you step by step how to use an extraordinary set of tools, as well as provide great market calls too. Sign up today.
The Path of Least Resistance, David White's daily market letter, gives you trade recommendations based on David's proprietary Power Law Vector indicator that put the odds of success overwhelmingly in your favor. He'll give you the entry price, price target, and stop price for each stock and option trade. David combines his years of trading experience along with his background in technology and computing to offer his subscribers his take on the markets on a daily basis. Every trading day by 9:30, David publishes his morning issue of The Path of Least Resistance, along with updates sent out throughout the week whenever there is new actionable trading information. All new subscribers receive a 30-day, no questions asked, money-back guarantee. To sign up for David White's daily trading newsletter right now, visit the front page of TFNN.com and you'll find The Path of Least Resistance under Trading Newsletters.
Tom takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Tom O'Brien.
Welcome back, folks. Let's go over and take a look at the Dow. What's ironic here, folks, there's no doubt, is that, and Tommy and I were talking about this on our morning show this morning, is that, you know, you have Walgreens that just went into the Dow Industrials on Tuesday. Walgreens, folks, is what is actually putting weakness into the Dow. That is putting 41 negative points into the Dow. You have United Health putting 19 negative, McDonald's 7, Walmart 6, and Chevron 2. The leader, Boeing is putting a positive 36 points in. You have Goldman putting 23, IBM 17, JP Morgan 12. Into the NDX 100, the strength versus the weakness in the NDX 100. You have Shire is up 4.4%. You get Take-Two Interactive is up 3.7%. Activision is up 3.4%. Once again, the culprit out here inside the NDX 100, also Walgreens. Walgreens is down 9.3%. Mylan Pharmaceuticals off 3%. You get Starbucks down 2.8%. And Henry Schein is off 1.8%. So if we go over to Starbucks, we take a look at Starbucks, but you're going to see Starbucks hitting a low for the year today, $47.37. And the way Starbucks is trading out here, they have a problem in paradise. I believe the CFO resigned today. Let's see what they're saying. Yeah, so Starbucks CFO retires. Starbucks Chief Financial Officer will retire this year. Scott Mao's retirement comes as Starbucks grapples with slowing sales in the U.S., a tricky expansion in the key Chinese markets, and the departure of longtime executive Schultz. So they have a whole turnover happening, and that in itself, turnover at the highest part of the ranks, guess what? It is spooking that stock. Starbucks had a great run. There's no doubt about that. In 2009, it was $4.10. So it was a 10-bagger, goes all the way up to 64. Actually, that's a 15-bagger. And then just gives it up. You know, you broke the consolidation this month. We went from 57 to 47. And we bring this closer, what you're going to see, this is another high volume spike low. Now, this one gets really interesting, and this is why. And I remember speaking about this on the 28th of the week of the 28th. Let me bring this back. I had to put this. Let's see. I had to put this on a daily so you get the exact day. There it is. Okay. So on the August 24th of 2015. That day, August itself, that was the last time we had a big pullback in the marketplace. And what did happen is that you had Starbucks go down to $42.06. Now, that's a high volume low. It's also a spike. And it's like, okay, how do these spikes work? Well, bottom line is that what I've found out, folks, okay, whether you spike higher or you spike lower, if that's a real trade, which in this case it was, because I remember this, you know, very clearly because I said, oh my God, is that really going to go there? Well, bottom line is that, yeah, it's going to go there, and it looks like it's going to be 3 years later that's going to get into that number. So that's pretty intense. There's no two ways about that. High volume lows, high volume highs, they love to get spiked. Let's go over to Goldman Sachs, because Goldman today is the second leader inside the Dow Industrials, and what you're going to see is dead cat bounce. You know, Goldman went from 275 4 months ago. You're trading 223. You know, you already broke the high volume lows. We go to the XLF. We take a look at the XLF. XLF out here, $26.60. Now that has to get back into 26.76. 26.76 was the break of the consolidation that we've been in, and you broke it. And bottom line is that good old Berkshire Hathaway, which is the largest weighting structure in the financial section, the XLF, that is still trading at 187.15, and the number would have to get back inside is 189.30. So thus far, the financials are still in tough shape. What is really intriguing is that with the oil market so high, we were talking about this yesterday, the XLE is having a hard time holding price. It's pretty amazing, actually. So the XLE sideways move out here today. You're up 13 cents, trading $75.44. If we go take a look at ExxonMobil, Exxon out here, flat market, 81.87. Chevron's sideways market too, down 42 cents, but sideways market. That number is pretty hard to get your head wrapped around when we're talking a $73 to $74 oil. It's a huge number. We go take a look at Google. You know, Google had already, it's trading at a huge consolidation. What Google did out here today is it went to a lower low, rejected lower price. You know, we'll see what kind of a bounce we can get out of it. Facebook, which has not laid off the highs at all. Bottom line is that even when the market, had pulled back, last week and a half, 2 weeks, Facebook went down from 203 and only hit a low of 193, and then rejected it. Intel, different ball game. The chip stocks, they basically led on the way up, and they're still having a hard time right now. Intel's up 55 cents, but it's not getting the price acceleration. NVIDIA, we go take a look at NVIDIA. NVIDIA's up $5, 240. Same type of setup. NVIDIA, you're coming into 16 million shares. You've done 7.6 million shares. It doesn't look to me like that's going to get any juice going. Lam Research, LRCX. This was one of the leaders on the way down, and you want to keep your eye around this because Lam also is making its way down to the 156. Right now you're trading at 170. This is down from the high of 234. So these have been some big numbers right across different sectors inside the marketplace. Bank of America, let's go look at Bank of America. Bank of America is the leading equity today inside the Dow. We'll see how Bank of America trades at 29.13. So what Bank of America did, we're down from a high of 33. We got to 28.30 today. It looks like it wants to try to get into this 29.13, and that whole area is going to be really important. The reason being, of course, is that once you break out of a consolidation, that consolidation, we've been on that consolidation almost 2 years. That's a problem child when you break out of it. J.P. Morgan, let's go take a look at J.P. Morgan. J.P. Morgan. That number is 103.98. Okay, so here we go. So J.P. Morgan has actually got back inside it. So this is going to be an important one at the end of the week tomorrow, because if we set this up, let me just look at this on a weekly. Yeah, it's going to be really important on a weekly because what you have is this: 103.98. You're not going to have the volume, so we have the test in place for the weekly. The 103.98 is going to be the number. We have done thus far 61 million shares. Well, that high volume spike had 140 million. We're not going to do 140 million, but that's going to be important to keep your eye on. And we'll see how this shakes out tomorrow, because there's no doubt going into a long weekend, July 4th weekend, the way the volatility has been in this marketplace, the VIX right now is still trading at 16.8. What a 16 VIX means that you can have a 1% move at any time, either up or down. that's how that shakes out. Dow Industrials right now up 104. You get the Nasdaq up 57. S&Ps are up 12. Come right back.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters. Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV for the latest market information.
Welcome back, folks. And, you know, Amazon is quite a wrecking crew, actually. And I want to thank for the Tigers and Tigresses in the Den for giving me the heads up because, you know, they're going to be starting their own, well, actually, they're going to support a whole delivery system of small businesses, FDX. And what you're going to see here is that Federal Express, that's getting smoked. It's down, well, it's down in the last 2 weeks from 266 to 226. Next deal, guess what, folks? High volume swing point, February 9th. That low's 226. 20, we hit 222.44. It's going to close right at that level. And you're closing at the level, and you're closing that level, and your volume once again. So bottom line is that, you know, pay attention to that high volume low that is down there, and many of, well, just about all the equities. UPS, same setup. UPS is down $2.50 or 2.5%. We're at 105.82. You take a look at UPS, that's still hanging at highs. It's a high volume consolidation up at the highs. But what you do have with UPS is this. You have come down off that high, and it has volume as it's coming down, and it's monster volume, folks. The first month down, we did 131 million. shares after making a high with 79 million. That's problematic in a huge way. That's saying you get volume off the high. The real question is that what type of follow-through do we think we're going to get? The next numbers that will come out in FedEx, it's not till September 18th. But when you do look at FedEx, we go back to FedEx for a second. We pull FedEx up, and you put this out, what you're going to see, they're both the same type of setup, meaning that they've been up at these highs for 7 months. And they both have had a sell down, and that sell down has an expansion of volume, and that's problematic in a huge way. And you know, we'll see how long it takes. Amazon is saying that this new delivery deal that they're going to put out there, bottom line is you have $10,000. They have set up the leasing structures inside these cars, and you know, bottom line is that FedEx, UPS, Post Office, I suspect they're all going to be not taken in percentage-wise how much they've been taken in off the Amazon order. I don't expect that to go away. The reason being is that Amazon keeps growing. Stay right there, folks. Coming back with some numbers after the close.
You know what's cool? Taking something that's good for you. Something specifically formulated to help with weight loss, better sleep, stress reduction, and the need to detox.
Nico, our hunter and gatherer ancestors found all their nutritional requirements for health in their wild environment. But today, our food sources no longer contain the vitamins, minerals, and nutrients our bodies need to stay healthy and strong.
That's why we need Primal Edge Daily Nutrition. It includes a special blend of ionic, soil-based vitamins, minerals, fatty, and amino acids in an easy-to-use liquid form.
Primal Edge is powered by highly concentrated fulvic and humic acids, nature's preferred delivery system. They have been called miracle molecules because, like sunlight, air, and water, life cannot exist without them.
That's right, Paige. They ensure we receive all the nutrition we need to be healthy and thrive. We take it every morning.
Primal Edge, formulated and approved by Nico and Paige of Living a Primal Lifestyle. Buy it today for just $89. Click on the Primal Edge banner on the front page of TFNN.com. The following is a presentation of TFNN. The Tom O'Brien Show is produced every business day. Tom takes your phone calls toll free at 1-877-927-6648. Internationally at 727-445-1044.
Oh, look who we have. It's a beautiful thing. Look at our man, Tim from Minneapolis. We're going to take him by storm.
Taking it by storm, baby.
I love that. That's a great saying, man. Hey, what's happening, brother?
Good morning, gentlemen. How you guys doing today?
Good, man. Yourself?
Oh, man. It's been the most incredible couple of days since when I called in on Friday, Litecoin busted out of that consolidation on the 2-hour chart.
Okay.
And it just never looked back. It did a 100-point ABC up, and now it's very extended the way I look at it. But
yeah.
Holy I mean, it went up to $420 last night.
Now, Tom O'Brien.
Welcome, folks. This is Tom O'Brien of TFNN. We go 5 days a week. We go 10 hours a day. We go 24 hours a day on the internet at TFNN.com. Always remember, folks, whatever you think about, you bring about. Whatever you focus on grows. Hope everyone's having a great day, safe day. Let's make it a great night, folks. We're going to be kicking into the July 4th weekend. Actually, July 4th week. That's tomorrow. Ask for what you want. Don't make assumptions. Find the courage to ask for what you want. Others have the right to tell you yes or no, but you always have the right to ask. Likewise, everyone has the right to ask you for what they want, and you have the right to say yes or no. Market-wise, let's take a look at it out here. We had the Dow Industrials up 98, NASDAQ up 58, S&P's up 13. You know, that being said, bottom line, folks, is that the bulls and bears, they were fighting like crazy, and the market really didn't hold. We had the SPY get up to 271.75. You closed out at 270.91. Bottom line is that you really get a sideways move out here. Percentage-wise, what you do have inside the S&Ps, S&Ps were up 0.6%. NASDAQ was up 0.8. Dow was up 0.4. We take a look at the Dow Industrials, same type of setup inside the Dow. Dow Industrials, they had got up to a price point today of 24,308. And bottom line gave up about 80, 90 points, you know, in the last, well, from the highs to the lows today. So you really also have a sideways move there. Now, because we're coming into the end of the week, what you're going to see, all these charts are setting up that unless you can get an expansion tomorrow on price in a huge way, bottom line is that you're going to see that the NASDAQ, S&Ps, Dow, you come off the highs, and in the NASDAQ's case, we are inside the lower range. The lower range being the 7,500. Right now, you're at 7,503. So you're outside it by three pennies. If we take a look at the cash S&P, how the cash S&P set up, now this baby, thus far is topped out in January. And what you do have here is that the cash S&P, anything below 2742, basically was saying that, guess what, you are also in the lower range there. And the problem with the cash S&P, folks, goes like this, is that we've had many sectors, many of the equities already hit your February 9th high volume swing low. Some of them basically held. Google held, went back topside. The financials did not hold. FedEx just came down, just blew it out. And on the S&P, we're talking about 2532. So you're talking about a monster number. You're talking about 170 points from where we are right now. And I expect that number is going to get hit. Gold contract, bottom line coming into coming into a Friday. This is going to be, we'll see what kind of problem we have. Gold contract has been a one-way move down since April. April, we were at 1365. You're at 1249. And we have a high volume, well, it's not a high volume swing low, but the swing low out here is 1236. So 1236 very well could be game tomorrow. And if we go over to the dollar and just look at the correlation inside the dollar, what you're going to see is this. The dollar has been on a one-way move up. What has happened is that the dollar, keeps testing this 95 area. The 95 area goes back to October of 2017. Now, this number is really important. The reason being is that if we bust through this number, and with some force, but bottom line, it's been trying to do it. If we take a look at it, we've been up at this number now for 6 weeks. It had only traded there for 3 weeks in October and November of 2017, then gave it up. That's when the dollar ended up. That was the first counter trend bounce the dollar had since January of 2017. And then the dollar basically couldn't hold 95 and ends up trading down to 88. The reason this is so important is that there's not much, if this blows it away, there's not much to stop it because of the route down inside the dollar. When you basically take out a level and you've had such a route down, well, guess what? You can go up just as quick. So it's a big number out here. Silver market had broken out of its consolidation yesterday. We take a look at the silver market. Silver market was down a percent, 1.1%. And we get a little problem inside the silver market, too. If I take a look at the continuous contract, we pull up the continuous contract. What you're going to see inside the continuous contract is that we can get down to 15.55. That's your next swing point down there. Then we have a spike low of $15.15. So both those numbers, it looks like they're going to, the market itself wants to go after those numbers. GDX, different ball game. It's pretty amazing that GDX is actually holding up again. So someone basically is buying into the gold stocks. There's no doubt about that. Each and every time you get another pullback, you get a rejection of lower price. Your spread inside the GDX is getting smaller and smaller and smaller. Now, what that means, okay, when you're looking at it, that's what you like to see when you're basically getting at lows. The spread, the tightness of it gets much tighter, tighter, tighter. It winds up, we'll see whether we can get some traction in it. On a weekly basis, you're going into 326 million, and thus far, we're only down 104. What we certainly need, though, is just not the lighter volume. We need the rejection of lower price as you come into that level. Notes, bonds, the TLT, it looks to me like we're going to get some action topside in the bond market tomorrow. And if that's what we get, those S&Ps are going to be going south, too. Reason for that, the TLT refuses to back off its high volume swing high. Hasn't hit it yet. You're right next to it, though. We're laying right next to the $122.52. We hit $122.24 today. You get next to it like that, that looks to me like it wants to go after it again. Now, if we break this level and you have some juice behind it, you're going to talk about you could really get some juice going, because the next level inside the TLT is all the way up to 128. So it's certainly a big, excuse me, folks. It's certainly a big number. The 10-year yield right now, 2.84. That's where we're at. Some of the other higher, Tesla. So Tesla out here today. There's going to be a lot of action with Tesla next week, folks. Bottom line, the quarter is ending. Musk is going to have to come out with a statement if, in fact, he can start if he's building 5,000 Model 3s a week. That's going to be next week, and we'll find out one way or the other. We have the Dow Industrials. That finished up 98, NASDAQ up 58, S&P's up 14.5. We'll come right back.
Hi folks, Tom O'Brien here. If you'd like to get my daily newsletter, Market Insights, then now is a great time to sign up for a 30-day free trial. Every morning by 9:30, I send out my morning letter to subscribers with market commentary on a variety of markets, currencies, and commodities to keep investors up to date on the day's trading action. Included in Market Insights are specific buy and sell recommendations for stocks, ETFs, and even options, with stops and price targets included for every trade in my newsletter. If you'd like to try my newsletter risk-free for 30 days, then head over to the front page of TFNN and you'll find Market Insights under Trading Newsletters. I use my years of trading experience to bisect and dissect the market every morning and give my subscribers the most important information they need to know for the day ahead. I even issue afternoon updates for my subscribers whenever warranted with important market action. I'm always scouring the market for the next great trading opportunity. Sign up for your 30-day free trial to my daily newsletter, Market Insights, today by visiting the front page of TFNN.com. Wow! Go get 'em, folks.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. Are China A-shares hot or not? If you trade China A-shares, now may be time to take a closer look. Trade CHAU or CHAD, Directions Daily CSI 300 China A-share Bull and Bear ETFs. China A-shares in either direction. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Tom takes your phone calls. Now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. So let's go take a look at Nike. Just come out with numbers. Nike closed at $71.70. The low for the year is 50. The high is 75. Nike is trading at $74.63, so that's up $3. After the close on these numbers, let's see what they're saying. Okay, so earnings per share, the estimate had been 64 cents. They made 69. Revenue estimate was 9.41 billion. They made 9.8 billion. And then on top of that, and this is the big number, no doubt, Nike is going to buy back 15 billion of their B shares. I'm not sure what the... Yeah, so let's take a look at this. So North American revenue, the estimate was 3.8 billion. They took in 3.88. Big numbers all over the place. China revenue, the estimate was 1.3 billion. They took in 1.47. Asia, Asia plus Latin America, the estimate of 1.4 billion. They took in 1.44. So bottom line is that they basically are taking in some money. Their tax rate, you're going to love this, 6.4%. 6.4. These companies know how to basically move and not pay taxes, no doubt about that. KBH, let's go take a look at KBH. That's KB Home Builder. KB, the low for the year is $20. The high is $38. It closed today at $25.38. That is trading right now at $26.80, so that's up $1.50. Let's see what they have to say. So, okay, so, excuse me. Okay, here we go. So, the revenue, second quarter revenue beat the average analyst estimate. The estimate was 1.04 billion. They took in 1.10 billion. Earnings per share, 57 cents. They delivered 2,717 houses. That's net orders were up 3%. Their adjusted housing gross margin was 22%. I wonder what the adjusted is. What is in that number? Because that's a decent number. There's no doubt about that. Just what you always want to look at, folks, is that what do they adjust it with? Meaning, you know, did they put some other card there saying it's a gross number? Well, we'll find out. So let's go take a look at KB. KB is trading $26.45. This is down from $38 6 months ago. And what you're going to see the difference with KB, this is what is, you know, and this is always such a big heads up in the context of what stop losses are all about. What you'll see, you know, KB right now is $25. Well, when you go back to 2005, KB was $85. Now, the correlation with KB is that the other home builders, watch this, if I bring up Lennar, what you're going to see, highs to lows, is that we bring Lennar back, and you're going to see Lennar already tagged its high of 2005, $68.73. We went to $72. The differential there, folks, has to do with when the crash was taking place, Lennar, a few of the other home builders, they sold down the extra land that they had at the very beginning of the downdraft. Now, no one knew how far the downdraft was going to go. KB did not. They basically sat there with all their land, and that just took them to the cleaners in a huge way. What Lennar ended up doing, and a few of the others, is that they sold it early in the downdraft. Bottom line, they bought it back, and they bought more land about 3 years later. And then in between that, and this is where the real kicker was for the home builders in general, or anyone that was a builder in general on the downdraft, if in fact they weren't over their head, what Congress had done is that Congress had allowed, most times, well, you can look back 3 years inside your taxes in order to grab gains that you've already paid taxes on. What had happened is that Congress turned around and says, okay, we're going to let you go back 5 years and grab it. And then what ended up happening, of course, is that the housing market had made so much money for those amount of years, those companies had paid so much taxes, they got that rebate back in cash. Huge number, folks. And then on top of that, I suspect what they also had, you know, is that you had the aspect of the amount of losses that were still on the books, and what that does, that helps the numbers going forward. That's how that basically is shaken out. if you didn't hear it yet, inside the drug business, inside the delivery business out here, you had Amazon's going to be getting into the drug business in a big way. Now, they've always been out there saying that they want to get into it. Bottom line is that they made a deal out here today with they bought a pill pack that took the pharmaceutical companies, not the pharmaceuticals, that took the Walgreens of the world, CVS's of the world, McKinsey, McKesson, rather, is it McKinsey or McKesson? McKesson. Down and took them down deep. If you take a look at this McKesson, MCK, the low for the year is today, 131. The high is 178. These babies, bottom line, taking huge amounts of money, but, you know, $208 billion. They're taking $51 billion a quarter. And what you're going to see, these are all, this is an ABC down. It blew out its B point, blew it out with volume. Let's put this on a weekly and we can see how this is set up. Oh, yeah, that's right. This has the August high volume swing low from, I mean, October high volume swing low, 114. You're at 135 right now. 114 is game in a big way. Yeah, if we go back to Nike for a second, yeah, they're doing, is it a $15 billion buyback? This is a big number. They are doing, yeah, they're doing $15 billion in Class B shares. I'm not sure what a Class B share is. Let me look at this for a second. NKE/B. Don't know what it is, but bottom line, $15 billion. That's a decent number. Right now they have well, they got a lot of shares outstanding. They have 1.2 billion shares outstanding. So big number, no doubt about that. We go take a look at some of the higher volume. Well, let's go to the XLE first. You get oil at all-time highs, well, all-time highs for the year, and the XLE, folks, still can't hold price. So XLE is saying, guess what? The oil and the oil service stocks still want lower price. Not quite sure why. When you get oil trading out at the price point of 72, we actually hit 73 bucks out here today. If we do go into the gasoline market, let's take a look at gasoline because, of course, the barrels of light sweet crude, it's not like we buy barrels, but we certainly buy the products. And if we go take a look at the gasoline, the unleaded gasoline market, that's trading at $2.12 wholesale. And this looks like it's going to give it up. This is pretty cool, actually. Yeah, this doesn't, you know, we hit a high out here of $2.28 on the 22nd of May. You run down to $1.99. Yeah, this is a failure out here. This is pretty cool, actually. This is saying we can go back to 183. So we're going to keep an eye on this oil market. 877-927-6648. Dow Industrials finished up 98. NASDAQ up 58. S&P's up 14.5. We're coming right back.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how EverBank can help keep your money thriving just the way you want. Is growing your money a priority? EverBank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? EverBank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. EverBank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you, like it does me, call 1-855-750-4051 to find out what they can do for you. That's 1-855-750-4051. Call them today. EverBank is a member FDIC and equal housing lender.
No matter what kind of trader you are, 2018 is a great time to try out a subscription to Tom O'Brien's Gold Report. Whether you just plan on diversifying your portfolio with some exposure to gold and gold mining equities, or you're a gold bull that sees 2018 as the year of commodities, now is a great time to sign up for the Gold Report. Tom O'Brien publishes his Gold Report every Monday morning before the market opens and covers a variety of topics including gold, silver, platinum, copper, the XAU and HUI, the dollar, bonds, South African rand, as well as more than 20 of the most actively traded mining equities. Start your 2018 off with a bang and sign up for the Gold Report today. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. For all the details and to start your subscription right now, visit the front page of TFNN.com and you'll find the Gold Report under Investment Newsletters.
TFNN has put together the finest programming lineup each trading day, featuring some of the most knowledgeable and respected financial minds in the nation to educate traders and investors. On Mondays, Wednesdays, and Fridays, we broadcast 8 hours a day, starting at 9 a.m. as Larry Pesavento kicks us off with Trade What You See. Tuesdays and Thursdays, we broadcast 11 hours. Get an early and healthy start to your day as Nico and Paige bring you Living a Primal Lifestyle. Then catch Andy Hecht at 5 p.m. with the Commodities Hour, following the Tom O'Brien Show. Swim lessons from TD Ameritrade Thinkorswim is now at 11 a.m., followed by Basil Chapman at 12 noon. See the TFNN program lineup via the link on the front page of TFNN.com to get a complete overview of our TFNN shows and hosts. And keep TFNN's Tiger TV tuned in on your mobile device, PC, or Mac for the latest financial news and information throughout the broadcasting day. TFNN.com, educating investors. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. So, Amazon, this is pretty intriguing, actually. I was just reading about Amazon and the pill pack deal. What is intriguing here is that, if you remember, Amazon had filed to basically sell prescription drugs, but they had let that license lapse. So the companies in general, I'm sure that we're in that business, they started breathing a little freer. So much for that, okay? Because the bottom line is that when they let that license lapse, bottom line is that they came out today and PillPack is already in business, and in business in a big way. The intriguing thing is that when you actually look back at Amazon, if you remember, they bought, I think, drugstore.com, the URL. They had the URL in the 90s. So they've been looking to get into this business for a long period of time. It is no doubt a monster business. And we'll see, Amazon's niche, of course, is what? Is bringing the prices down, getting the middleman out, and delivery. What Amazon has done in the middle of this is that they got together with J.P. Morgan and Berkshire Hathaway, and they plan on being in the health insurance business. They had already, some of these health insurance companies had already got smacked because of that. Actually, let's go take a look at United Health for a second. So United Health is down 324 today. And when you take a look at United Health, the low for the year is 183, the high is 256. So this is still almost at highs, though. This haven't... Yeah, that's definitely at highs. This has been a one-way trip up, but what is intriguing is that it tested its 250 level and looks like it's going to, let's see, a few more days, 82 million. Yeah, it's going to fail. It's going to, if we close below 250, it's not going to have the volume. So we'll see where that does shake out. But what you do have inside Amazon, of course, is that they get to hook up with J.P. Morgan, they get to hook up with Berkshire Hathaway, they're going to be in the insurance business, they're going to take the middle out of the insurance business, and the real question is going to be, what can they do in the prescription drug business, the delivery part of the business, and then, of course, taking the middle out of the business. And we all know when Amazon gets into your business, forget it. If you remember, when Amazon started its cloud business, folks, okay, that was a very small portion of it, of the cloud of the business in general. Well, that cloud business, right now takes in 17.5 billion. Huge numbers, huge numbers. That cloud business is growing by 55% a year. It's just a monster number. Take a look at Amazon in general. In North America, they're growing by 27% a year. Internationally, they're growing by 17%. Those two parts, that's the retail type of business. That's the retail business, meaning everything we order off Amazon. The cloud business is exponential at $55 billion. 55% rather. And if we do take a look at the amount of money that these companies take in, what you're going to see is that I said McKesson takes in $251 billion a year. We go take a look at CVS, and out of these numbers, by the way, folks, is that it averages 77% of the revenue at CVS and Walgreens is for drugs. So when you take a look out here, when we take a look at it, you're going to see CVS takes in $188 billion. What do we say? With $250 for, so that's $350. That's $430. Walgreens. Let's see. Okay, so Walgreens, I think that's a $250 number also. No, it's only a $130 number. That's a $130 number. So you got the CVS. We get $250. We got $380, $485, $60. You're $560 billion, and as one of the Tigers was saying in there, you're not even, we're not talking, we don't have the Publix numbers in here. Publix, if you know, you're in the South at all, Publix is huge. We don't have, if you're in the North, there's Stop and Shop. I mean, there's a lot of other places out here that no doubt have pharmacies that sell. But you can see you're talking about $1 trillion business. That's what it seems like. Let's go over to Goldman, see what's happening with Goldman out here. So Goldman closed at 223. It's trading 221. Not sure what's happening here. Okay. Oh, look at this. Oh, here we go. Oh, my God. Deutsche Bank. Here we go. Fed says Goldman Sachs, Morgan Stanley can't boost payments this year. Oh, we're going to have some action, folks. Thanks, Dave, for sending that over. No, these are the stress tests that have just come out. But I can tell you something. The market wasn't thinking that they're not going to be able to basically. These banks wanted to push their dividend up. So right here, Fed says Goldman, Morgan Stanley can't boost payments this year. The Fed test forces J.P. Morgan, M&T, KeyBank, American Express to basically stop payments going out. Deutsche Bank, folks, who is, we've been talking about this, it's a big problem. That failed. That failed on qualitative grounds. This is a big number, man. This is going to be a problems in paradise here. We could see it. You could see it inside the XLF anyway. It's like, why is that XLF being sold down? Well, guess what? Someone always knows something. Bottom line, large players in the marketplace knew that there was going to be problems out here. You know, the thing that's amazing, actually, is that, you know, okay, so Morgan Stanley closed at 48.29. The thing that's amazing is that you have an economy that is great. The banks Morgan Stanley just went from 58 to 48, and the real question is going to be, how leveraged are they that the Fed is saying, hey, guess what? We've gone too far again. If we go take a look at Deutsche Bank, I suspect what you're going to see out here tomorrow morning, Deutsche Bank's going to go after this high volume swing low. It has a high volume swing low out here. I think it's 938, 998. And right now we're 1047. And if Deutsche Bank blows by this number, it's going to be a huge problem. What's going to be a problem also is this, is we talked about counter trend risk. What you're going to see is other banks, if they stop trading with Deutsche Bank, it's a huge problem. Deutsche Bank failed the first public stress test of the combined U.S. business as the Federal Reserve faulted the company's internal controls, giving it another black eye as executives trying to shore up investor confidence. The Fed found widespread and critical deficiencies across the firm's capital planning practices, according to the statement Thursday. It cited weakness in Deutsche Bank's risk management functions, yeah, big time, data capabilities, as well as the methodology and assumptions used to forecast how the unit would fare during stress. Of the 18 domestic and foreign banks that face the qualitative section of the exam, Deutsche was the only one to receive an objection. The finding shows authorities remain frustrated with the company's U.S. arm, which they added last year to a confidential list of troubled lenders. Big numbers, folks. Together, these weaknesses raise concerns about Deutsche Bank's U.S. ability to effectively determine its capital needs on a forward-looking basis. They don't even know what they have. Stay right there, folks. Come right back.
Many of our new listeners have heard about the Tiger's Den. The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of the TFNN shows, plus see all of the charts as they happen live and have access to archives of all of those charts. You can test drive the Tiger's Den absolutely free for 30 days and greatly enrich your knowledge of these markets and how to make your money work for you. Details on the Tiger's Den are on the front page of TFNN.com. Tiger TV is an exciting way to experience TFNN programming. See high-definition video giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
I'm certain you are or strive to be one of the best at everything you do in life. It's the most common trait that we tigers and tigresses share. If you're looking to become the best of the best when it comes to managing your money, let me teach you to do what most wealth managers tell you can't be done, which is how to time the markets. I'm Steve Rhodes, author of Mastering Probability, and for the last 12 months, Timer Digest has been tracking my newsletter signals, which have earned me the ranking as their #1 market timer in the nation for the S&P 500 for the last 12, 6, and 3 months. Timer Digest also ranks me as the #1 market timer for gold as well. The fact is, markets can be timed, and I'll teach you the exact set of tools that I use that has transformed me into one of the best at what I do. Sign up for Mastering Probability today by clicking on the newsletter tab on the homepage of TFNN.com and get immediate access to workshops where I take you step by step how to use an extraordinary set of tools, as well as provide great market calls too. Sign up today.
Tom takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Tom O'Brien.
Welcome back, folks. Okay, we get a lot of moving pieces here. So what you had when we first just announced the first part of this, meaning that you had Morgan Stanley, Goldman, the way that that's set up, it's saying that, let's see, Fed say Goldman, Morgan Stanley cannot boost payments this year. They also say that, so check out this part, that JP Morgan, M&T, Amex, they're going to temper their payments, their payouts. Now, that being said, what we just had coming across the tape, so watch how this shakes out. This is pretty amazing, actually. Wells Fargo, they're going to buy back 24.5 WFC in shares, billion in shares, billion that is, and they're boosting their dividend. They're going to, let's see, they're pushing the dividend up from 39 cents to 43. So Wells Fargo closed at $53.63. That's trading right now at $54.99. We go over to JP Morgan, JPM. let's see what J.P. Morgan is having to say. J.P. Morgan is going to raise their dividend from 56 cents to 80 cents. What a monster number that is, man. Holy cow. J.P. Morgan closed at 104.93. That's trading at 105.89. Now, American Express. Let's see what they have to say. Okay, American Express, they're going to buy back 3.4 billion shares, and they plan to boost their dividend also. So we get the tale of two deals out here in a big way. What's going to be intriguing is to oh, here we go, Capital One. They're all coming out, one after the other. So let's take a look here. Capital One CAP, the low for the year in Capital One, no, COF, COF. So the low Capital One for the year is $76. The high is $106. Capital One's going to buy back $1.2 billion in stock. They are maintaining their dividend of 40 cents. Capital One still trading flat out here. Big numbers all over the place. So your lone wolves out here that are going to have a problem in paradise, which is surprising. You know, especially Goldman, right? I mean, that's a big number. Goldman, Morgan Stanley can't push the payments higher. So that's it's not affecting the stock after the close out here. Goldman closed up $3. Still trading at $2.22. Well, it's down $1. Big deal. Morgan Stanley, that closed at $48.29. That's trading 48. The XLF, this is where the fight's going to be. That's trading up 11 cents right now. That closed up 23 cents. You're at $26.71. And we'll see if it can get back inside to 26.76. 26.76 is going to be the number. That's the number you're going to be looking at. To see if you can get back inside that place. It's going to be pretty wild watching that whole thing shake down. Deutsche Bank is the wild card here, folks. Deutsche Bank, no doubt. You know, bottom line is that you're 10.47. This has been an extraordinary mess. You take a look at this from the highs to the low. Deutsche Bank was $125 stock in 2007. When we hit the crash, this is lower than the crash of 2009. Deutsche Bank had hit $16.50, then did a counter trend bounce up to $66, then just blew away again. You know, bottom line is that we're going to test this high volume low at $9.98. The real question is going to be, does it test it? And, you know, bottom line, does it make it? One of the largest, well, the largest hedge fund in the world, Bridgewater Associates, that's Ray Dalio's firm, they are going to change their partner. They're going to change to a partnership, giving employees more ownership as the firm moves towards the next phase in its decade-long succession plan. Ray Dalio discussed the changes that were announced Thursday to employees earlier at the New York Times as well as Bloomberg. The new structure will give employees say in the governance and management of the firm and will provide them with greater economic stake in the business. Dalio saying it seemed like a natural evolution. The move comes as 68-year-old Dalio is more than midway through his 10-year succession plan that had some false starts. The billionaire, who plans to relinquish his co-chairmanship title within the next 4 years, has had trouble getting the right leadership team in place since the transition officially began in 2010. Together with co-investment officer Bob Prince and Greg Jennison, Dalio chose 6 seed partners and 50 other partners. The two classes will work together to establish the functions, members, and responsibility of the new partnership. They will have broad representation because they're the owners. Dalio said in the interview, several of the partners already have equity in the firm, but will continue to have more equity. He said, we will never, never, never be a public company. The first step in Dalio's exit strategy was selling shares in Bridgewater. He once owned the entire company. He now has less than half. He now has less than half and has said that he plans to reduce his share to be 10 to 20%. As of last year, They had 200 employees. Jensen and Price own more than the rest. Let's see. So bottom line is that you get 200 people. I think it's. It doesn't say in this one actually who the, how much they're. I think it's 150 billion. Talking about money, right? I believe that that firm had 150 billion. That's what I heard this afternoon. So, big number. (877-927-6648). Yeah, as one of our Tigers are saying that the market evidently did expect that Deutsche Bank would have a problem with the stress test, you know, and we'll see what the market thinks about that tomorrow. There's no doubt that the world knows, in the trading world knows in particular, that Deutsche Bank's been a problem and been a problem for a long period of time. Small caps. Let's go over to the small caps. So the IWM out here didn't get any traction today. Now this is really intriguing because of the fact that the IWM went to higher highs, was the strongest indice out here until the 20th of June. Out here today, no traction. You're up 50 cents. You're trading 163. If we actually go take a look at the actual index, the Russell index, the Russell traded up 4 points. You're 1645. And that's a big heads up because that is major divergence inside the marketplace, meaning that you had the strongest indice, couldn't hold price. Bottom line, coming into the weekend, we'll see where this shakes out. My take looking at this market is that you really had a sideways market out here. You did, if the market had held, you know, we were up 20 points, 21 points in the S&P. If the market had held that, you could really, I could look at the aspect and say, hey, listen, man, that was a rejection of lower price, did have lighter volume. But just giving up those 5 points, you really get a sideways move. You know, bottom line is that it's a sideways move, and there's no strength behind that move. Dow Industrials closed up 98, NASDAQ up 58, S&P's up 15.5. We'll come right back.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters. David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today. With over $56 million in cash and over $66 million in working capital, Great Panther Silver is positioned as a company with a solid foundation and poised for growth. While completely unhedged to the price of silver, Great Panther retains 100% ownership in 2 producing mines in Mexico, which is the top silver producing country in the world, along with future potential production in Peru. Great Panther is highly leveraged to the price of silver, and after a great year of performance in 2016, Great Panther Silver has a strong outlook for 2017 as well. With good liquidity in trading and strong fundamentals on the balance sheet, while remaining completely unhedged to the price of gold and silver, now is a perfect time to take a closer look at this equity. If you'd like to find out more about Great Panther Silver, then go to greatpanther.com or check them out on the NYSE market, symbol GPL, or the TSX, symbol GPR.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV for the latest market information.
Welcome back, folks. Okay, so let's go. We're going to have Asia open up in about 4.5 hours. Last night, looking at Asia, bottom line is that the Nikkei, was flat. You had the Hang Seng up 0.5%. Shanghai was still down 0.9%. If we start with Shanghai, what you're going to see right now, we're at 27.86. And, bottom line, it looks like we're still going to get lower price. The Shanghai in 5 months is down from 35.87 to 27.86. If we do go over to Europe next, and we take a look at the DAX in Germany, Deutsche Bank is in the DAX. Deutsche Bank, the DAX today was down 171 points. Big number. The DAX in Germany looks like it's going after a swing low out there of 11,726. So that's about another 500 points down. The FTSE in the UK, what do you have with the FTSE in the UK? FTSE in the UK, bottom line, flat market out here today, 76.15. What you want to keep your eye on, that's going to be the big number coming in over the weekend, is this. So picture, we have July 4th. Our markets close half a day on Tuesday. Wednesday, July 4th, we're closed. All of next week is going to be a slow week. It'll be a slow week around the world also, folks, because when our markets are closed, bottom line, it slows down the world. The real question is going to be, what do we have happen with the dollar tomorrow, as well as the metals, and, of course, the S&P. My take on this is that we are not going to run higher into that market. The reason I'm saying that, the way the market traded today, you have the high volume lows that are laying out there still in the February time frame. And the real question is going to be, as these money managers more than likely are closing down for the week, is that where are they going to position themselves coming into that full week when very well a lot of them are going to be away for a full week. That's a big number. So we'll see how they position themselves hedging, whether it's in the puts, the calls, the bond market. The bond market continues to say it wants higher price, and that's where I'm coming from. Bonds want higher price. This market is going south. Always remember, folks, whatever you think about, you bring about. Whatever you focus on grows. And whatever you want in life, folks, visualize it like a nice big motion picture. Step into it, take ownership, and fly with it. Thanks for being here, folks. Have a great night, safe night. Look forward to speaking right back here at 8 o'clock tomorrow morning. Go get them, folks.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.